When someone says they own stock in Apple or Tesla, they almost certainly own just one type. But most investors don't realize there are actually two completely different classes of stock, and they work nothing alike. The one you're familiar with is common stock. It's what you buy through any brokerage account when you purchase shares of a publicly traded company. Common stock gives you partial ownership of that company, voting rights on corporate decisions, and a stake in its future growth. If the company does well, your shares go up. If it struggles, they go down. There's no floor, no guarantee, but there's also no ceiling. That unlimited upside is the whole appeal. Then there's preferred stock. It sounds like it might be the better deal, but preferred doesn't mean superior, it means different. Preferred stockholders receive a fixed dividend paid at a set rate, and they get paid before common stockholders do. The trade-off is that preferred stock barely moves with the company's growth. Its price is tied to that fixed dividend, not the company's earnings trajectory, which means it behaves much more like a bond than a stock. When interest rates rise, preferred stock prices tend to fall. When rates drop, they tend to rise. There are a few other key differences worth knowing. Common stockholders get voting rights. Preferred stockholders usually don't. If a company goes bankrupt, preferred stockholders have a higher claim on remaining assets than common stockholders, but they're still behind bondholders. In most bankruptcies, common stockholders walk away with nothing. So who actually buys preferred stock? Mostly institutional investors in income-focused portfolios that want predictable dividend payments over growth. As an individual investor, virtually everything you'll encounter, stock tickers, earnings reports, analyst ratings, ETFs, is referring to common stock. Understanding the difference between common and preferred stock is one of those foundational concepts every investor needs in their toolkit. If you're building your investing foundation, there's a platform called TickerVision worth checking out. It's a complete AI-powered investing toolkit with stock analysis, portfolio tracking, watch lists, and more, all built for self-directed investors who want to research smarter and faster. Link in bio, create a free account, and start exploring today.